Hey, good morning. This is Mayor Valensky with Driving Markets. I hope you're well. Okay, so yesterday the markets came off significantly, around to the level of the Dow was about 34,600 closing. The Nasdaq came down to about 14,200, was down 280 points, and the S&P was down 45 points. What caused it? So let's go through a couple of hard factors. Mainly, the number one driver yesterday on pushing the markets down was interest rates. The 10-year yield went up to 2.55%, which is the highest in over 3 years. That's an indication that interest rates are going to move much faster than anticipated. The other factor was the vice chair of the US Fed, called Lael Brainwood. He said that rates have to move at a much faster pace in order to curb inflation. Take that into account. Comments by a member of the Fed and the fact that the 10-year bond moved up to 2.55% pushed markets significantly down and interest rates significantly up. When interest rates rise, the main index that's affected by rising interest rates is the Nasdaq. The Nasdaq went down yesterday on the back of rising interest rates, simply because what happens is the appetite to invest in high risk investments falls away, and therefore the Nasdaq was the biggest sufferer. When interest rates are low, the Nasdaq rises. That's regarding interest rates and why the market fell yesterday. Look also at what Germany is proposing regarding sanctions with Russia. They want to sanction all coal, all energy coal coming from Russia. They're going to sanction. That also caused a spike in the markets, or spike downwards in the markets, a drop in the market, simply because that is further sanctioning and that is further geopolitical uncertainty going forward. Markets do not like uncertainty. So you've got a mixture of interest rates, you've got a mixture of sanctions. What else have we got? We've also got Twitter. Let's look at Twitter. Twitter went up yesterday initially on the back of Elon Musk being voted on to the board at Twitter. And not only has Elon Musk been a critic, he's a fan and a critic of Twitter, and just last month sent a questionnaire or survey out to his 80 million followers. Is Twitter a free speech platform, or are they restricting free speech? 70% of the respondees said that Twitter restricts free speech. So there's probably going to be significant changes at Twitter. The CEO welcomed Musk onto the board and is excited to work with him. I can see that Musk loves Twitter, and he's going to end up making major changes there. A share to follow. The shares did fall at the end of the day in the afternoon with all the other tech stocks. However, longer term, it's a share to watch, because if Elon Musk is on the board and Elon Musk has bought 9.2%, that, in my opinion, which I love Elon Musk, so I'm slightly biased, I think it's probably going to move the shares significantly. Cryptos were also down yesterday following the rest of the market. Remember, cryptos is a risk asset investment. So those people who want appetite for risk, go and trade or invest in cryptos. I did have a conversation yesterday with one of my very, very, very senior colleagues, and I asked him, what would be the theory on Bitcoin actually contradict or going against the market, as a wild theory, thinking, would people go into cryptos, go into Bitcoins as a medium for payment, and in spite of the markets falling, would Bitcoin rise? And he adamantly says at this stage, because of the price and the cost of transactions in crypto and Bitcoin, and used some of the actual electronic money payment platforms as a measure of the cost of transfer money, he says those EMIs, like TransferWise, is much cheaper to move money than cryptos. Remember, cryptos are used by a lot of people to hide taxes or money laundering or scammers, so there is an element there of crime. However, the general public do like crypto and are big fans of Bitcoin, but it will fall in line with the rest of the markets because it is a risk-related investment. And if risk is off the table, then Bitcoin and cryptos will be sold off. The dollar gained significantly yesterday on the back of Lael Brainwood's comments, the vice chair of the Fed, that interest rates will have to move a lot faster in order to combat the raging inflation. You have to remember that inflation is raging in the States. So for a vice chair of the Fed to say that they need to battle inflation and they need to raise interest rates much faster than anticipated, that sent yields on the 10-year sky high, and the 30-year mortgage for the first time in a decade went above 5%. That will have a big impact on homeowners. So looking forward, you've got the markets that are range bound. However, there are comments, there's geopolitical issues, there's economic issues, there's a lot of uncertainty out there. So you're going to get a little bit of volatility, and if you've got profits, take them quickly, because the market can turn around on a sixpence. If you need to get a hold of me, contact me on LinkedIn, on WhatsApp, on YouTube, on Instagram. This is Mayor Valensky with Driving Markets. Have a good day.